Hey guys, it's 6 o'clock and welcome to this video for today. We are on the 30th of March, and I thought that today we'll take a look just at the S&P 500, and I want to present you some bearish counts and kind of go through them and see if they're still valid in any way or not. And we'll take a look at our count, at the bullish count, and then we're also going to close off with taking a look at Bitcoin. So let's get going. Let's get to work. I got my coffee ready over here. Hopefully we'll get this done pretty quick. Shouldn't be a long one. Let me get this out of the way, then just present you the charts. All right. So this is just a clean chart of the S&P 500. Clearly, let's take a look and let's start with the bearish count. So if you remember, these were some of the counts that we've had when we did the sell-off back in here. And I didn't touch this count since last time maybe I looked at it, maybe when this B wave was over there. Let me see which date that was. So basically November, maybe December. I think it was about the end of October, November, something like that. So at the time, we were thinking that possibly, there could be maybe another sell-off coming in this wave C. And to complete a triple correction, still for a wave 2, somewhere towards the 61.8 retracement of this entire advance. And that would have come over at 3200. And it would have lined up pretty well, with the bottom of this channel in here. At about 3200, you would have hit 61.8 retracement of this latest move, and just to kind of stay true to the market being, a fifth wave or being something larger, we were looking at this as a 1-2, and then, the beginning of, again, just another trend to the upside. But we wanted to give it a bit more room, right? And plus, you had this B wave top in here right before the pandemic crash, and we would have lined up, somewhere in this neighborhood, maybe with the flush, right? That was about 33.93 with the flush down to 3200. You would have, and a lot of people, could were waiting for this, and then you can even today you can still hear, in the media, this type of a target here, 3200, before this bear market is over. So now let's dive in and take a look at what's going on in there, and if that's still something that could actually work, and in which way this thing could still be. So clearly right now it's very hard to keep this. Let me just delete that. It's very hard to keep this as an ABC. So let me just delete this, right? Because it doesn't make any sense anymore. If you would have sold off from here, or maybe straight up from here in an AB, then down in C, right, that would have been something that we could get behind. AB and then down in C, like that. And you would have had ABC, X, ABC, X, ABC for Z, and you would have had, like a triple zigzag. I'll call it a triple zigzag. But that didn't happen. Okay, now, if you move this B wave here, let's just do a calculation. Now you know about the guideline of the right look in the Elliott wave principle. Let me just take, remove these channels too, because now we broke above this channel as well, right? So if you're a bear and you're looking at these counts and say, dude, these counts are not really working. What's going on in here? I'm waiting for 3200. I'm using, the proper guidelines in here. I want to see this price is kind of getting hit, and the market doesn't do that. It's just pushing the other way around, or, it's maybe sideways. So look at the size of this, right? So let's say that this is an ABC, AB, and then you get a 1, 2, 3, 4, 5. Now, first of all, you would have to sell off super aggressively for these targets to get hit. Where 3200 is, because now if I do this, to reach these levels, you would have to be by May. So in about a month, you would have to drop this whole thing, which is, quite outrageous. something horrible has to happen here, in the month of April for this thing to kind of crash, so much. Okay. So then what's going on? If you move, so that's unlikely, right? So then you would have to give this room to kind of go more sideways like this. Well, that's still could be maybe towards 3,300. But it needs to kind of drag along, 1, 2, 3, 4, and 5. So it's actually got to get going. And maybe that's by, if you look in time, right, maybe that's by September. So now let's do this. Let's kind of copy this decline. Here, I'll make it thicker. Just get my things out of the way here. Let's make it thicker like that. Okay, let's Control copy and do that. So this would be the size of this decline, the speed of this decline will match, this decline in here, or this decline will match this one in terms of size and amplitude and whatever. And it will tell you that, you would reach 3,000 by October. Make sense? October, it's a bad month. Usually that's when you find lows. That's why you were back in here in September, October 13, right? Now, a year later, you're still in a big bear market and you're coming as a wave 2. Now also look at this. Look at this proportion now, right? At kind of how this will look. This would be a pretty big second wave, a pretty large one if you're dropping back in here. So I think if that happens, then there might be something else going on, not a second wave, but maybe something much larger, and we'll get to that in a second. So I'm just kind of, spitballing here, just letting my mind run arguments and looking at these counts, right? I did not prepare this in any way. I'm just looking and judging this at the same time with you. Together we're doing it here, just looking at the counts. So, all right, fine. So this is, let's say that's a correction. Now that's a B. Okay. Now this has got to be, it cannot be anymore a W, X, Y, X, A, B, C for a Z, because it doesn't match the proportion anymore. Okay, so it doesn't work. Because wave W is small, wave Y is small, and then wave Z would be that much bigger, and that's not in line with the guidelines of these kind of triple zigzags. So, what else it could be going on in here? Well, if it's not a Z, and we looked at it, right, because, we placed this B wave, considering that this is a 3-wave move, well, then we got to get rid of all this stuff. So we're eliminating the fact that this would be some kind of a triple correction, right? And like those arguments are kind of got dismantled in here, right? You would have to maybe make a quick drop, like I said, to make a C wave. And even then, right, it would be quite disproportionate. I'm going to delete this. Let's delete all of them. Yes. Okay. So now we eliminated all of those. Just take this arrow out of the way too. I'm going to move this over. And, right, so this is, okay, the other argument is, okay, if this drops, it has to drop like a stone like that to kind of finish this up sooner than that, right, which is kind of, we just established that that's kind of unlikely. This sell-off was quite aggressive, right, and it still took, a year, right, from January to the end of November almost, right, whatever it was, 10 months. For this thing to decline. So now, how do we do this? Well, you would have to count this in some kind of a, let's just put the 3-wave decline first, right? Because we're just going to keep it simple, correction. And you're going to go A, B, C. And I'm going to remove these 2 lines so you can see the A, B, C in here. Let's just do a C versus A. Okay, so 100% C versus A will come in at about, I think we were somewhere into that target at about 3,040 right there. We're using percentages, right? Percentage moves with an unlock scale. Let me remove the 88% remove ratio. So that's 3,040, and that angle, it's pretty similar, right? Yep, pretty good. Okay, now, how do we do this wave A? So this, it's got to be labeled now, because if it's a zigzag, it needs to have a 5-way move in A, and then you got to have a 5-way move in C. And so there's only 3 types of corrections, right? We have zigzags, we have flats, and we have triangles. Everything else is a combination of these guys. It cannot be a flat. Why? Because wave B only corrected 61.8, not even, of this entire decline. For a flat, this wave B would have to go 88.7 or higher, 80% or higher, and you would have to be at 335. Now, again, you can do complex in here and maybe do that as a wave A, B, and then up in C, but then it's already kind of getting into, different territory. So I'm just going to keep this here as a B wave. So now I'm working with the data that we have. So this now, if it's a zigzag, needs to have 5 waves. So, well, where do you see 5 waves? Well, I see this decline, I see this move, I see this decline, I see this big move. So we have 2 big moves, and then you have 1, 2, kind of 3 declines in here, right? So one way to label that, it would be, see, this move here, it's not as easy, it's not as clean, it's not as clear. People can make out of it whatever they kind of, there's arguments here. It's a real life move, not a book move, and it gives some trouble because you got some overlaps in here, you got some middle of the road moves, and it can be counted corrective, but it can also be counted sort of impulsive. In what? In a diagonal. So we're going to decompose this as a leading diagonal. Okay, so that comes as a 1, 2, 3, 4, 5. I'm going to show the channel. 1, 2, 3, 4, 5. In what you would call this more of an expanding diagonal, where wave 5 would have to be longer than wave 3. Now, if you look here, I just pressed Alt 5, and if you look, the wave 5, this 5th wave, would be longer than wave 3 if you're passing 3400, 3392, which we never did. We stopped at 3486, right? So we got an issue there. Now, rules sometimes are bended in here, and R.N. Elliott, he wasn't very clear on these diagonals. There is documentation there, but it's not clear on, I don't even know if he talked about this expanding diagonals back then. He said, hey, if you see a structure that kind of moves from, either when you decline or when you go up, and you have kind of a contracting move, and then the waves get smaller, that's kind of qualifies as a leading diagonal. But now, this kind of gets used by the bears as a reason to say, fine, this is still, a big bearish count, because, look at this, you're having an expanding diagonal, and since it's not as clear, the book says that in an expanding diagonal, and that's been, written by Robert Proctor. So in the expanding diagonal, this wave 5 has to be bigger than wave 3. Wave 3 has to be bigger than wave 1. So if that's the thing, then why are we accepting this in here? I don't know. Maybe because things are not very clear on the diagonals, and maybe this imperfection here, could be considered okay. So let's just kind of entertain that. All right, but that's a negative for the count. Right, if we're putting it on a list, what's positive, what's negative, that would be a negative for this count. So that would be a wave A decline. Then you go up in B, let's say in 3 waves, and now you have a 1, 2, 3, 4, 5. In here, you do a second wave, and you begin the next move lower, but that has to get going. Right, so I'm going to remove this and push this to the side so we just kind of have it a bit more clear. So you would have to do something like this. Now, if this was an expanding, this maybe it's going to be, just a straight impulse. Now think about this. Wave 3, it's supposed to be the biggest and the strongest wave in a sequence. What this count is saying here, everything aside, what this count is saying here is telling you that there's a huge drop coming, that there's supposed to be a huge drop coming in the market, but not, tomorrow, like yesterday, okay? Because the third wave, it's kind of like that. It's got to be sharp down, and it's got to go. So when does it start? Does it start tomorrow? Does it start in April? Now let's just put a little bit just to kind of look at it. July, So you would have to have the month of April, May, and June, right? Maybe even a little bit in July, about 3 months of full declines in here in the market that are supposed to kind of start dropping pretty soon. Let's just do a measurement in here, just because the right. It looks okay, but let's just do that. let's just copy paste this, right? So it kind of matches. So you would have to be very aggressive. Now, for the S&P 500, guys, to drop from this to this, which is 20% in about 70 days, right there, right? That's a huge move. Something terrible needs to happen here. A big bank blowing up, VIX going through the roof. I don't know. Some kind of revolt, war, something bad. I don't know, something, you would have to be a writer for, for these kind of end of the world movies to kind of come up with a scenario to say that, we need another huge wave of bearishness. And maybe, I wake up one morning and this whole thing is down 10% in whatever news. That assuming that the Fed is not watching, that the fiscal side is not watching, that, so for a market to collapse like that, okay, maybe the inflation will have to go to, 15% next month, or back to 10%, or maybe 8%, I don't know, just a huge jump in inflation to kind of scare the crap out of the market and just say the Fed comes out and raises another, 150 basis points in one meeting. For this move in here to happen, okay? So if you're out there kind of thinking about this, dreaming about this, like you got to think, how would that happen? Okay, so that's just kind of the extreme scenario on ABC. But that's kind of how I would see that the bears, are still having an argument here, being an ABC or being, the end of the United States and the free markets, and, a switch over to discount. Guys, am I recording this? I think so. Okay. Of discount, right? That's the ultra bearish count where you're starting from a super cycle primary, you're going back to the 20s, to the 30s, even before that, and this is the end of everything. And you're barely starting to move lower at the primary degree of trend, not even cycle, super cycle, like what? You would have to have 5 waves, first of all, in the primary, to complete a wave A, of a cycle. I mean, I would have to kind of go the other way to kind of start thinking about how that would look. So now, okay, the other thing is that maybe this is what's happening. I don't know how, I don't know why, but that this is at the 1, 2, 1, 2. Now this is much bigger than this. So, we can just kind of forget about this double 1, 2, because if that's the case, then we're going straight down as a rocket. So let's just clean it up and just say, fine, that's not a 1, 2, 1, 2, but wave 1 moves here and wave 2 moves here. And you're actually beginning a third wave instead of a wave C. And this actually only completes wave 1. Well, if this is wave 3, right, then you need to put up a 4, okay? And then you need to put up a 5. That's intermediate degree. Okay, to kind of give you something like that. So you have to have 3. I'm just looking for some kind of proportion, because remember, 100% equality, it's only at about 3,000. So for a normal third wave, a big one, right, you got to go 161.8. So maybe that's at 2,000. I don't know exactly the number. I don't have it here, but let me just clean this up so we can see it. And then, because I don't need to see it here, the 1 month, okay? So then that would give you, let's say, that's in 2000, right? That's 4. That would be 1, and this would be 5. Something like that. I'm just looking at the normal thing. I mean, look, and let's just check this out. Where will you be in this bear market? What, 2028? What, are we going to get 5 years of nobody, buying the stock market and everybody just throwing their hands up in the air? And, none of these companies don't make any money, and we have a civil war, and everything goes to shit, and, AI takes over, and like what, how you're going to get that? And I know, Robert Proctor has, these kind of, dreams about, this type of stuff happening, and we have too much credit. And I mean, but that's such a negative kind of a look, that personally would eat me inside to, think, that this would happen in a market, something like that. okay, where you're dropping in here. What is this? From current levels to here, like a 60% drop. Like what is this? The Great Depression is coming. Okay, and this is only wave one. All right, that would be only wave one because this is a terminal move in the market for whatever reason. I don't have the rest of the accounts, but that's the idea, right? That's a fifth wave. And, you know, by the time this whole story is done, I don't know, S&P 500 is back to 20 or 100 or whatever, you know, because you have that kind of logarithmic, you know, rise and all of that. That's like saying Bitcoin goes to, you know, $100 next. So I know that these stories are fun and they, you know, they sell subscriptions and they scare people and, you know, I use it sometimes, you know, just kind of anecdotally and just kind of throw a chart out there every once in a while. What if this happens, you know? Well, I mean, a lot of things, right? What's fear, right? Fear is you know, I don't know how to translate it, but I know in Romanian, right? It's something that's never actually becoming real. It escapes me right now. I got a brain fart. So, you know, it's all these things that, you know, you think are going to come and get you and they actually never take place. So anyway, that's the idea on this kind of 1-2 move. Okay, so two things. A, B, C for a normal correction, right? Which I can get behind a little bit better, right? But even then, right, I have to think that this would have to take all the way back to October once again after 222 and good part of 2021, a bunch of the stocks got killed and they revalued themselves, and they're starting to base. Like, who's going to lead this to the downside? Who? Zoom? Because it's already been down, you know, PayPal, I don't know, DraftKings, Peloton, and all these kind of crazy ARK stocks that have been completely demolished. So you would have to take the stocks that are big to take this market down. You would have to take down Apple. You have to take down Google. You have to take down Microsoft. You have to take Nvidia. You would have to take, you know, I don't know, a bunch of Coca-Cola. You have to take down the whole Dow stocks to take you down that much, right? You have to be a crash of massive proportions in these stocks. Like, why? Have you seen the lineup of Apple, you know, on the movies they're coming up with and how huge they're going into this industry now? Okay, their products are not that innovative anymore, but who knows what they're going to get into with this artificial intelligence, right? So it's really hard to kind of paint this bearish picture and how that's going to happen. Okay, now let's think about the bullish count, which is, okay, it's not the best, right? But at least it's a little optimistic. What if we're done with the correction here in a simple ABC? And instead of having a 1, 2, 3, 4, 5, you know, we just have a 1, 2, like dropping 1, flat in 2, 3, 4, and 5. Okay, wave 4 it's a bit smaller than 2. Maybe you can even do a leading diagonal in here. 1, 2, 3, 4, 5. I don't know. I gotta measure this third and this first. And then ABC up in 2, and then you have another 1, 2, 3, 4, 5. What if this was it? This was the whole ABC in here, and you have a leading diagonal wave 1 down in 2, or you take this wave 2, move it over because that's a 5-wave move, and you got yourself a flat. And you're looking at that. You're looking at a very simple flat in here, in a wave 1, in a wave 2, and you're starting 3, 4, and 5, and you're going higher. We're above these levels, and you continue to grow. The companies make money, the world is getting better, they grow their earnings. Reshuffle, new companies are coming up from the mid caps, from the small caps, and some of them get thrown out, the one that are bad, but you know, so this is something. I mean, they scared us so much, even with this kind of latest banking crap, so much that is like, can't even think straight that, you know, that something like this is possible, right? We're getting some kind of a credit crunch and real estate collapses. You know, the commercial real estate is the latest thing that's going to happen, and fine. You know, wouldn't it be funny to look at this video, I don't know, 4 months from now, and this whole thing to kind of be crashing down and be like, shit, you know, where did this come from? I don't think so. I think that we have a pretty big base in here, and I think that, you know, this is going to continue to kind of climb to the upside. I mean, people have been throwing their hands up in the air. You know, traders are, you know, don't even care much. I mean, there's a lot of put options being bought. Everybody thought, oh, this is the crisis. You know, Bob Proctor sent a note the moment that the market dropped in the Dow. You know, where is it? Let me get it for you. Here, I'm going to show it to you right here, and I'm going to go, I mean, I know this video is going to take a little bit of time, but you know what? I think it's worth it. All right, right here, after this move right here, he sent a note out and said that this is the beginning of the new bear market, and this is the time that everything kind of collapses, something like that. I've seen this. So now we're back above these levels, you know. So that was a special bulletin because this is the beginning of the, you know, the drop, beginning of the drop, and you are here back at these highs. And maybe this is the beginning of the drop. So I don't know. It just kind of you know, makes things a little weird. Again, I'm not happy. I'm not saying this is, you know, the best count out there, but I know that since October we haven't been back there at all, and this was a big drop, and you have a left shoulder, you got a couple of right shoulders in here, and you're trying to kind of squeeze to the upside. Now if you break above these levels, you know, then what? Well, of course, because there's always more room, right? Well, this B wave would probably go here. Okay, and let me show you something. Here's what the bears are going to do here. Instead of this being an ABC, okay, this is going to be now an ABC X ABC for a B wave. That's how they're going to count it. ABC X ABC. And when that fails, if it does, then this is going to be a three-wave decline in an ABC. That's going to be an ABC of a flat into the 80%. Like that, and then you're going to go lower. Okay, so let me just show it to you. A, B, C, okay, because that's how we have it for the wave 2. And then that's going to be like a, you know, WXY. WX and another A, B, C into 80%, and then the crash begins. Okay, they will not give this up. They will not give this up. Okay, now, what if you make new all-time highs? Well, now you got a problem. Now you got a problem because now you have to count it as a wave 2, because now you have a flat in a wave 2, and then you're going to get the C wave drop, but then you don't get the crash anymore. You just get, you know, you got a bit of a crash maybe in a C wave, right? Or you're moving. Let's just do that, right? Or you're moving this whole sequence higher. This whole sequence from here gets moved above these levels, and it goes whatever, you know, with the new height that you're going to make, it goes up there. I don't know how you count this, but I have a feeling that it might be some kind of ending diagonal in a fifth wave. That's how they're going to do it, the bears. That's how that's going to be. A fifth wave, this whole thing is probably going to be in some kind of a ending diagonal like this. And then it's the end of the world. So you tell me, okay? Because I'm running you through the scenarios, because I've done Elliott wave a while, and I can kind of, you know, see how some of the stuff can get twisted to kind of fit a narrative that you have, either to sell a subscription or, you know, to sell the fear or to whatever. Am I going to be right? I don't really care. But I've switched. I did count it, you know, on the bearish side because I was thinking maybe 32 coming. But in January, at the middle of January, I started to kind of shift things back. I'm like, I don't know, man, this ain't working, you know. Because this things, you know, continue to kind of get pushed out of the way. Maybe it's going to work again. I'm not saying it won't or you know, but I just kind of told you the arguments I don't think it's going to. So I'll stay with this. Again, either as a 1-2-1-2 or as a flat, and we're going to continue to look for higher and remain optimistic. And if the market gives signs that it's about to break lower, then we'll just, you know, enjoy the bear, you know, as much as possible, you know. Just kind of stay out of the stocks, sell, or maybe go short or whatever, you know. But I'm not going to sit here and continue to squeeze a bearish count, you know, as much as possible until, you know, my thesis gets proven correct. Anyway, yeah, it is what it is. I'm doing those mistakes too. Sometimes I'm trying to stay away from them as much as possible and not to do them, you know, and try to shake off any, you know, kind of bias you have, and just kind of, and that's why I wanted to present this to you guys today, just to kind of show you what's happening on the bear side, because I don't talk about it a lot, because I don't think it's got validity to it at the moment. Okay, well, this was a bit scary in here, you know, that they probably could have taken it lower, and in the small caps they actually did, right? They went below these levels, and it looks kind of bad in there, but that doesn't mean, you know, that there's a huge crash coming. So let's just, enough about this. Let me jump over to Bitcoin and we'll close it off. I don't even know how much this. I'm going to keep Bitcoin short. Basically, we have the 1-2 as a flat in here. You can put the wave 1 in here. I don't have a problem with it. Wave 1 and 2. And then, that's another 1-2. Now, again, this was very, very short. In the last night updates, I did say, if you go back and read that, I did say that is possible, that this could be a B wave of a flat, just like this was, right? Bitcoin seems to like to do this shit, like where it goes up and then it comes back down in some kind of a flat. Now, the problem is that this is almost like a 5-wave move. Not that this one, wasn't very similar to being a 5-wave move, and instead it was just a B wave. Or maybe I was wrong. Maybe this was a wave 1. And I'm not counting it right? I'm always kind of thinking about it. And maybe this is hold 2. Maybe this is a 5th. Maybe this is a wave 5 as well. And this wave 1 goes here, and now we're beginning the decline. I don't know, but either way, that's just the idea that if the wave 2 finished here, then this is a 1 small 2, and we rip, right? So we're not really supposed to come below these levels, and that's kind of how I'm going to judge this. If you come below here, then where is it? Right there, right? 26,525. If you get below there, then we know that this is probably a flat like that, or we shift the wave 1 here, and then this still has to develop as a wave 2. So there's much more pain in here. Based on that, I mean, the only way you would think that this is a 5th wave is if you go in an extended 1, 2, 3, sideways 4, and up in 5. It's a bit ugly. I kind of dislike it, but I'm not going to completely just wipe it off, right? 1, 2, 3, 4, 5, and now you begin the decline in a wave 2, which takes some time. So you're looking middle of April, end of April, maybe another month of a push. I'm watching also the timeline in here for the 61.8. So very important what's happening now. This 26,525, it's kind of the line in the sand for this, and if you're stopping here and pushing higher, that means that's a 1 and a wave 2 into the 61.8, and then you rip to the upside and you move towards 32,383, and that's kind of what I have for you in Bitcoin. You can see in here, right, just a little bit of just a small, push this up, just a small failure out of there, which kind of happened last night. We'll see what they want to do up here, but again, I'm not, since we're in Ethereum, I'm going to kind of hold on to that, and I'm not too happy with the way the price action is in Bitcoin. It's just a bit too nervous, a bit too risky, because it could run some drops. It's a bit too high from the 200-day moving average. So it doesn't give me a great pleasure to kind of sit on the sideline in this. But there's nothing I can do here. I can't. It's not something I can get behind. You can't really put stops. It's a bit tricky. So I'll leave it at that, guys, and thanks for watching.